Well, welcome to today's webinar on closing the savings gap, empowering a new breed of financial advisors. I'm really pleased to welcome back Petronella West, CEO and Wealth Manager of Investment Quorum. In terms of this morning's events, the first thing to do is to introduce myself. I'm Mike Wardle, CEO of ZN. Many of you will have seen me on these webinars before. My job is very much to start the process off and then get out of the way and leave the floor to today's speaker. First of all, though, a word of thanks to our sponsors. We're very fortunate at the FS Club to have a really wide range of sponsors that enable us to run these webinar programs and to go far and wide across the fields of economics, finance, technology, science, and other esoteric things that we get interested in. So thank you to our sponsors. As I said, my job is very much to get out of the way very quickly and to so we've got plenty of time to hear from Petronella. The format for today is very much going to be a kind of presentation from Petronella, more in a discursive style, I think, than a telling you things style. And then there'll be plenty of time for your questions at the end of the process. So a couple of housekeeping points before we move on. First of all, today's session is being recorded. So if you want to go back and refresh your memory as to what's been said, or you want to alert friends and colleagues you think might find this interesting, the recording will be up on our website in a couple of days' time, and you can share that with you. The other housekeeping thing is, for those of you who have not used GoToWebinar before, you may be asking, well, how do I ask a question? The answer is that on the dashboard you have on your screen, you'll find a questions tab. You can type in your question, and then we'll manage those at the end of the session between myself and Petronella. So without any further ado, I'd like to introduce Petronella. As I say, she's CEO and Wealth Manager at Investment Quorum, a double-chartered pension transfer specialist with over 30 years experience in financial services industry, and providing personalized financial planning and investment solutions. And really looking forward, Petronella, to hearing some of your thoughts about where we are at the moment and what the future holds. So the floor is yours.
Thank you very much, and good morning, everybody. I mean, fundamentally, we have a huge problem in the UK. People are just not saving enough for retirement. We've had a period of low interest rates, low inflation. That's obviously not what the future holds. What we don't want is people running out of money when they get to retirement and being entirely dependent on the state. One of the things that I think I'm qualified today to talk to you about this is that I've been a financial advisor since the very late 80s, early 90s. Yes, I've got a very good hairdresser, can't possibly have been in the industry for that long. But I've seen enormous change over the last 30 years, a lot of it positive, some of it negative. And what I believe we really need to do today is to find more and new financial advisors to help bridge the savings gap. A little bit about my history. So I said I started in financial services at Halifax back in the 80s. I've been through the Retail Distribution Review, which was fundamental in changing the professional face of financial services. As Mike said, I'm double chartered because financial advisors have to take a huge amount of exams to become qualified and continue to do so throughout their whole professional career, just like accountants and lawyers, really. So it's a fantastic profession to be in. I founded Investment Quorum in 2000 at the start of another recession, so we're quite used to those. Obviously, we went into the financial crisis, which dramatically changed everything that was going on with financial services as a result of what happened. And today, we did a management buyout in 2018, and I brought on board a new breed of investors, if you like. And what I asked them is, because I was so passionate about giving clients advice, was that they should be investing with the view to not selling the company. Because one of the biggest issues today, I think, is that there is so much consolidation of the smaller traditional financial advisor morphed into the big firms, and largely because independent firms can't stay independent because of the huge amount of regulatory and costs involved in giving financial advice. So we got mass consolidation. And when we did the management buyout, my passion was that the people that work in the organization own the organization. And I spoke on that on another previous webinar, because I believe that we need to put ownership of financial services giving advice organization in the hands of those that drive it forward. And that will be the future financial advisors. So we now manage about 450 million of client assets, and we are training our advisors in a really different way. And the reason that we need to train them in a different way is because customers want something different from us. There's now, I think, in the UK, a high expectation that when you go to see a financial advisor, they know what they're talking about. You expect them to have the necessary qualifications to tell you what it is you need to do to build your cash flow, to put money into your pension, what it is that you need to do. But what really matters to people that we've discovered is that they really care about what that money really means to them. So taking them on a slightly different journey, which is more all about financial well-being. And I think there were 60,000 financial advisors when I began in the industry back in the late 80s. And we're now at a number of something like 27. So unfortunately, there are too few of us to service this enormous savings gap. So let's look at the role of technology. Now, some of you may be aware that Vanguard, one of the largest asset managers in the world of low-cost passive investments, entered the financial advice arena, and they were trying to provide financial advice on a fixed lower cost. But they pulled out of the market, leaving about 500,000 clients adrift. It left a bunch of financial advisors looking for jobs. And although I don't know the fundamental reason for why they did that, I would imagine it's because they couldn't make it profitable. And they could have made it profitable, I believe, because actually humans want to talk to humans when it comes to financial advice. And because if you trust us with your money, then surely you trust us with almost all the big financial decisions that you make. Which school do your children go to? Will I outlive my money? Have I put enough money away? What do I do about my grandchildren? How do I help my children? What if I get sick? What if I die? These are really emotive discussions that you need to be having with your advisor today. And in fact, most people aren't that interested in pensions. Might be the most exciting topic in the world to me. But actually what they want to know is, will my pension actually deliver the outcome that I want? So, the online systems for kind of talking or through robo-advice are probably not actually working. So I think the digital side of that has a huge amount of development, and I'm going to talk about that in a few minutes. So if we know that our clients are coming to us wanting to talk about what really matters to them about money, and we're having conversations with them about the well-being of their financial well-being, and also that that whole statement of money doesn't make us happy, but money is also a route to having some degree of financial freedom. So we think that our advisors should want to not only look after my clients, which I've built up over the last 30 years, but my clients' children and my clients' grandchildren. And how do I make that happen? I'm 54. Over the next 10 years, I'm going to be handing down the reins to the future owners of the business. By doing so, by changing the ownership of the organization and allowing my young financial advisors to come through the ranks and gradually take control so that they can drive the future. That means when I talk to you about your finances, I know that your children and your grandchildren will be taken care of by future financial generations. But unfortunately, going back to the consolidation, what is happening is that the older financial advisors, and I do believe the average age of the financial services sort of advisor industry is still in the late 50s and early 60s, people want to get out. Why do they want to get out? As I said, because of the overburden of regulation. So let's talk about regulation. Some of you may know there is a massive piece of regulation heading our way, the Consumer Duty. And one fundamental wording that the FCA put into Consumer Duty is, do not do your client harm. So we've had 25 years of regulation. We've been through the global financial crisis, we've come through COVID, and we still have a regulator that wants the financial services industry, that they want us not to do harm. So are we still doing harm? Well, yes, we are, unfortunately. The British Steel Pension Scheme, some of you may know, has its own financial services compensation redress scheme because too many advisors transferred out, let's call them Mr. and Mrs. Miggins, out of a gold-plated final salary pension scheme. So problems are still arising. So we have to rebuild trust. And the way to rebuild trust is to make sure that we're hiring people into financial services who put the client at the core of their business. And what we believe at Investment Quorum is that to empower these advisors, we also need to hand ownership to these future advisors so they have a vested interest in making sure that they don't have run-ins with the FCA, that they don't have the wrong thing and they don't have to go back and deal with redress, that they always do the right thing for the consumer. So now I understand why Vanguard might pull out, because that advisor has it's probably a high degree of EQ, high degree of empathy, high degree of interest in the well-being of our clients and of you. And I think that's very difficult to do through technology. One question I'm asked a lot is about AI and technology. So I think AI is very exciting, but actually we use AI to help sort out data. We use AI to deliver operational efficiency. We try to use AI to remove the stuff that we have to do every day, the important stuff in managing a regulatory business, but thereby allowing our financial advisors to spend more time in the meeting room with the client, the virtual meeting room, the face-to-face meeting room, over a cup of coffee, wherever it is. Because as I said, if you're going to trust us with your money, then you're probably trusting us as one of the biggest decisions, financial decisions that you make in your entire life. And you want the confidence that your advisor will be here with you tomorrow. So the larger organizations with the mass consolidation are finding it harder and harder to deliver that service whilst they're grabbing all the assets. And assets and managing assets is obviously incredibly valuable for financial services. We know that. And whether you've got a low cost proposition or an active proposition, you know, whatever type of investments you're buying, that's just the tool that powers the financial plan of any client. So whether, you know, that's the side of the business is almost a given, but it's where all the consolidation happening. And I think the Vanguard story, if it's taught me anything, is that actually humans want to talk to humans. I've been talking to kids a lot, kind of teenage kids, young people. We employ a lot of young people about financial services. And what I've come to learn is that the bank of mum and dad and the advice of mum and dad still plays a huge part in our Gen Z growing generations. They might put a tenner on crypto. They might do Robinhood, GameStop, those fun things that existed. But fundamentally, they go to their parents to talk to for advice. We give very little education in schools. So we do need find a way to deliver financial services to young people at a better cost. And I think there are some successful subscription models that will evolve over time. But fundamentally, the more wealthier people get, or if you hit one of those critical times in your life where you face death, sickness, unemployment, divorce, those painful challenges, that's the time we think you want to come and talk to an advisor. And that's the type of advisors that we are trying to build at Investment Quorum. And I think the industry will help close the savings gap if what we find is that you can obtain financial advice from having maybe a subscription model, but from an advisor that really deeply cares about you as an individual. So that way, what we think is that if, you know, the regulation that's coming will hopefully transform what's happening today in financial services, and it will mean that we stop doing harm to the consumer. Because if we stop doing harm to the consumer, then hopefully we will see a reduction in PI claims and therefore a reduction in regulatory. People do question the role of the FCA. I hear it quite a lot, but at the end of the day, the regulator's there to do one thing: protect the consumer. And if we don't look after the consumer as an industry, then of course the regulator's still going to play a really big role. So in my vision for the future, I think that humans still want humans. We were talking earlier about the whole return to work, office, work from home, interaction. The reason we want to go back to work, we want people back to work, is so humans can work with humans. We work very effectively together, which is why I think financial advisors in today's world are those financial advisors who have that huge amount of empathy, as I said, that EQ and that desire to look at financial well-being. The kind of final point I'd probably make around this is really around it's financial health, but also mental health. I'm sure most of the listeners today will have discovered either someone in their own organization, in their own family, who has suffered as a result of some degree of mental health or mental anguish or mental anxiety. And money is probably one of the biggest stresses. So great financial advisors can really help that path. And in dealing with vulnerability, which isn't necessarily being old and you've perhaps lost capacity in some format, but it could be because you're facing one of those traumas. And the financial advisors of today need to be able to understand how to talk to you and talk to our clients about how they're feeling about their money, because it can affect the financial decisions they make. People might be very gung-ho after winning a lottery and wasting all their money on cryptocurrency and not making good, sound financial decisions. May not understand that, you know, money will last forever. Or they might be making decisions that are too low risk. They're too frightened to make investment decisions because they're scared, because they've suffered a trauma. And then maybe they put their money into low risk investments when they should be in higher risk investments. So I think in order to close this savings gap, we have a long, long way to go. But I do feel as though the things that we need to change first and foremost is always putting the customer first. And the big consolidation that goes on, I'm not always sure that it puts the customers first. Potentially, it delivers scale, and in scale, you can reduce cost. And most of the firms I saw the sponsors are part of this organization will understand that we're probably facing some very tough economic conditions over the next 10 to 15 years. Where will inflation go? Where will interest rates go? What will equity markets do? Will our money keep pace with inflation? Because if it doesn't, we've got an even bigger problem. But we need to encourage people to keep putting their money away regularly. So the consolidators and the low cost tick in the box. But if they swallow up all the financial advisors in the same scope, and I get offered to buy my business all the time, but I don't think that's how we're going to solve the problem. We need to have banks going back to that role where they used to fulfill, of being able to provide basic advice to consumers. But because of the regulatory environment, lots of them pull out. So it's a really big challenge that we've got. We've got expensive regulation. It's expensive to train people. Small organizations like mine are fewer and far between. But my desire for the culture of financial services is that we actually start thinking about changing the way we deliver advice to the consumer, because it's clear the technology will play a part, but the human to human is the bigger part. So we seek out young professional graduates, those with good EQ, those with attributes that we really value, which is all about being courageous, being able to be tenacious and have the adaptability to change with the environment, but who have that high level of empathy in talking to clients. And there's lots of them out there today, lots and lots of them out there. So we're keen to train them and bring them up so that they can talk to our clients about how what money really means to them and financial well-being. And I think then we can start to think about how we can deliver that using technology, using a subscription model. Who knows? Maybe Vanguard will come back into the market. Who knows? We need more organizations wanting to talk to consumers about their money. And I think IQ is kind of at the starting point, if you like. So Mike, I don't know if that's a good resume in terms of where we see things changing. But I do think that there is a future. It's taking us a long way to get there, and organizations need to be investing more into these kind of things. So I know I speak quite fast, and that's not 11:25, but I don't know if that sparked any interest in our audience in terms of questions.
I think the first of all question for me, but it links to a question that has come from Trevor Hill, but I'll come to it in a minute. But I guess my question is whether there are products actually available for you to advise clients to go to, which actually meets the need. I'm trying to think, the old, as you mentioned, the gold-plated pension standard.
Yeah.
And there used to be sort of products there that should say, look, you invest in this from the beginning of your working life to the end of your working life, and we will guarantee that you'll get a certain level of benefit out of it, which will be sufficient to take you through the rest of your life. And obviously in the pensions world, that's completely shifted over to defined contributions. But are there products out there which are available in sufficient quality and quantity for you to be able to advise your clients to take them?
Yeah, I mean, I think the thing is the thing with final salary pension scheme is as long as you kept working for the same, you knew what you were going to get. That's the whole thing with talk about the British Steel pension scheme. And obviously now it's a number going into a pot. So you have to look at it the other way around. You have to say, well, if I need that amount of money to live off at age 65, 70, state pension provision, obviously we don't know where that's going to go, but let's assume there'll be some form of basic state pension. And then it's building blocks. So you kind of almost, when you log into these pension provider, and I always say to people, please log in to Nest or Aviva or Standard Life or Scottish Widows, because there's lots of tools on the provider websites. It's clear to me that the providers, in the absence of advisors, are having to take on the burden of giving advice, but there is lots of kind of projections and cash flows and things on the website. So those are really good tools for the consumer to use. Obviously, they come to us. We always start with a cash flow plan. So where do you want to be, and what does your financial future look like? And then we work backwards, because actually, if you're 25 and you're sitting in a low risk, well, I'm not saying obviously back on the agenda for investing, but you don't want to be in a low risk strategy because you've got 25 years to go. So there's also that mixed that kind of thing. So there are lots of products out there that are low cost. There's lots of tools on lots of websites, Aviva, the big pension providers. The interesting thing that we're now seeing is that where big employers move to DC operations and using some of the larger pension consultants, the pension consultants are now realizing that all the employees, where they're offering this low cost stuff, now want to say, well, what do I do with my post-retirement? Do I buy an annuity? Do I go into drawdown? What do I do when I get to 65? Got all these options. Then the government blows it all up by taking a bunch of regulation away. Then the pretend shadow government come in and say, well, we're going to change it all back again. So nobody really knows where they are. And of course, these big platforms which existed to deliver low cost DC arrangements for individuals, great low cost investments, but no advice whatsoever. So this is where I think the technology will come in. I think there will be, a bit like, can I bring my dog on the aeroplane and you can ask on an AI chat bot or something? People will be saying, how much do I need to put into my pension? So I think the tools will develop. And lots of providers have tools. I mean, we have low cost offerings. We've always have to be careful between advice and guidance, because the FCA comes back saying, well, if you give advice, and are you really giving advice? So I think the websites that are out there, if you've got a pension with Hargreaves or with Aviva or Wealthify, whoever, there's lots of tools there, but you've got to make the time to stop and look and say, where am I in terms of your pension?
Thank you. So I'll tell a chunk and comes Trevor Hilder's question. He's just asking whether you think the financial system is stable enough to make promises to your clients that can be trusted over the longer term. So there's kind of regulatory change and political risk that we're facing, but there's also some instability in the financial system.
There's a lot of instability. I've been in the industry since 1987, so I've seen a lot of these. It's just a roller coaster, isn't it? It's a roller coaster of fear. And I think it's very difficult right now because, with what's going on in the States with the debt ceiling, it's just terrifying, and it always has to go right to the wire. They've always resolved it. And obviously, depending on where you are, there's people who think that's the end of the world, the end of the dollar, end of dollarism. And, are we going to see changes to that? And then you've also got those sort of probably over optimistic, there's loads of cash around, so, markets will go up. But you've only got to look at what happened with tech stocks. I mean, last year, 2022, was a nightmare for tech stocks. This year, it's, and I think it comes back to, I have faith in the financial future. And I think it's about, if you're going to invest in companies who've got a tomorrow. And I think it's about being able to understand risk. So risk and volatility, every advisor should be taking clients through a risk story. And it's not just about filling in a questionnaire saying, I don't like this and I don't like that's just one element of it. It's about understanding, do you want to be on the fairground ride on the roller coaster? Because that's what markets are. Or you're more of a sort of sit around in the teacups on the fairground ride. And it's understanding that. So we have to educate the consumer. I do, but I have financial faith in the future. I think in 10 years' time, I'll look out my window and I will see schools and cars, and I mean, they might be flying through the air, but we're still going to have a system. Yeah.
Okay, so a question from Clive Bullen here, who just says, is there any current advice about what amount of money should your pension fund be to pay an adequate income in retirement? Do we have any sort of benchmarks for saying how much of your income needs to be going into long-term pension kind of arrangements over your lifetime to give you a decent chance of a good retirement?
It goes back to the question. So the question really should be, how much money in today's money do you need every single month? So we start with that question. So the heating and the eating, right? You need a roof over your head, you need to pay the bills, and you need to put food on the table. And then from there on you build, car, gifts to grandchildren, where do you want to live, what's your forever home, what does that look like? You know, it's kind of imagining your future self without doing one of those aging apps, you know, where you look like 106. And it's like, put yourself forward and say, I need this is what I want, and I want it in today's money, this would be this. And let's say it's, you know, £1,500 a month for the bills, and then it might be another 1,000 a month for clothes and car rents, and then maybe I want to go on a holiday, so maybe it's 2,500 a month. So I need 30,000 a year net income today. And then what we do is just simple mathematics, you know, let's forecast it forward. Let's take assumptions for inflation and interest rates over that time period, 20 years. I'm probably not going to use an inflation rate of 8.5 or 10%, because I think the storm we're in now is a storm, but we will come through this storm. I don't know quite what will look like on the other side, but we need to make sensible guess for what we think our portfolio will grow by in order to power that amount of money, and then work it backwards and review it. You can't just sort of, oh, okay, I'll do that and then forget about it. And that's about having a financial plan. Actually, there's quite a lot of tools to do that on the internet. Lots of cash flow tools and things you can do, but start with the other way around. What do I want? What does it look like? How does it feel? Plan for it, and then do the financials behind it.
Thank you. Chris David's asked a question, which is really about, you know, where the savings gap hits, and saying presumably a lot of the savings gap is people with net assets or savings less than £100,000. They're not the, you know, the richest in society, and just really asking, is financial advice and wealth management only really viable for people with substantial assets? You know, what's the role of financial advisors for people who are of more modest means,
Yes.
and who are facing, so if you could just give us some thoughts about how financial advice can help people who are not in the high end net worth scale.
But that's, as I said, so, you know, my passion would be that we can provide more of this great advice to more people. Financial planning is not complicated. There's a lot of common sense to financial planning, right? A lot of it. You know, don't take too much risk. Don't tie up money for too much longer. But all it needs is education. So I do think that schools need to bring in more education so people are more financially literate. So we've got to teach our kids about budgeting for the future, and we can't change it overnight. The future that there's a great advisor who's building something called Helena Wardle, and she's building a model based on a US model, which is this subscription. So let's say you've got low value assets, but you desperately need advice, but you can't afford the £400 fee or the £500 fee. Is there a subscription model where AI will help you answer that question? I think that's in the process of being built. And then, of course, when you get to a point where it's too complicated, then you might then need to reach out and link to an advisor. So a subscription model of sorts is viable in large numbers if it's being approached like that, as opposed to building assets. And I think the technology for that is coming, and I think it's really exciting. It's not here today, but I think that it will come, and that will help those lower value clients. But also, you know, but banks used to fill this role. You know, you used to go and see your bank advisor, and you used to get some of that support through the banks. But the banks then didn't make any money after the financial crisis. So if banks are now making a lot more money, can they then bring back? But of course, they've lost their branches. It's all gone online. They haven't made the profits. They haven't behaved well. So I think something will emerge. As I said, with all these things, like you don't know quite what's going to appear tomorrow. The savings gap is huge. And the biggest fear I have is that when auto enrollment came in 2006, the idea was that 8%, which is the total contributions that goes into pensions, that's still not enough. That's still going to leave people on poverty lines of, you know, earning less than 25,000 a year. So state pension provision will fill a really big role there, but it's a problem. It is a problem. But the government, as we get ever an aging population, the more pressure is going to be on the government. And so unless the government do something to try to change this, but of course, with a regulator that heavily regulates, making it very expensive, unless something has to give first. We've got to start giving good advice, lower the regulation, lower the professional indemnity costs, lower the barriers to entry, and then maybe we get more advisors and we can do it at a lower cost. But it's a utopia. We've got a long way to go.
Thank you. There's a question here about, you know, what are the signs that a potential customer is dealing with an experienced and trustworthy financial advisor who really will have their interests at heart? So if I'm a punter, how do I differentiate?
Well, I think so we talk a lot about what is so we always have a discovery meeting with the client. We don't charge for that discovery meeting. You need to find out whether well, do we like each other? We're going to work together for the next 30 years. So one of the things is obviously that rapport building. I think anybody that approaches a financial advisor should immediately feel that that financial advisor has got their best interests at heart. It'll be an instinct, but that means they need to be asking you questions like, what experiences have you had with money? How do you feel about your money? What does your money mean to you? You know, and those are those more emotive questions is what it's not like, how much do you put into your pension? How much, like, you know, that's going to come as part of the financial planning process. But really, it's about when you sit down with somebody or talk to somebody, you want to be feeling that they're not just trying to work out whether you won the lottery and you've got £1 million hidden in your back pocket. So they actually care. And that's the questioning technique, I think. So when you walk into that, you should feel it's just probably like seeing a good private client lawyer. You know, they're going to really ask you questions about you, about your family, about what it really means to you. So I would hope there's more of us, and there are more of us out there. And if you're not getting that, then maybe look for somebody else. But probably on how you get to feel in that first 10 minutes of a meeting. Does that advisor make you feel comfortable and reassured? And even if they haven't got the best technical knowledge, it took me 30 years to get mine. You know, my team said, well, I'll never know as much as you. I'm like, well, I've done it for 30 years. Of course you won't. But you can get the basics right, because it's actually not that complicated. And when my advisors come up against something they haven't seen before, or they're not familiar with, we work in teams. So you've got senior advisor, junior advisor, and we're bringing teams up underneath so that, I mean, we're only a small organization, to ensure that we've got a future stream, if you like.
Yes, I do remember having a conversation with a financial advisor who just jumped to an assumption about what they thought I might want without having listened to anything I was saying. They didn't get any business from me. Someone else asking, is there an educational work background that is preferable if you're looking at young people who might become financial advisors? So is there a particular background if you're recruiting new advisors you look to? And secondly, how long does the training take and how much would it cost? So some really basic questions about the profession.
Yeah. So we do tend to hire grads because I sort of want someone who's just been a bit more than outside school. There are loads of apprenticeships and programs. It's not what we do, probably because by definition of our size. I wouldn't rule out anybody. The one thing I look for is the basic attributes of a human being. So I can teach them how to fact find. I can teach them, you know, we all do school exams. Some of the basic financial planning exams are just like a GCSE, to be honest with you. And people say to you, oh, but I'm not very good at maths. And I said, well, most of the population is not any good at maths. What you don't need to be, you don't necessarily be good at math. You do a bit logical, you know, can you work out what 25% is? Great. But even that you can teach, just chop an apple into 4. You know, the point is it's about the attributes that that person has, and that will largely come from their upbringing in terms of, and I don't mean being to a private school, I don't mean that at all. But what I mean is that they've probably grown up in an environment where they understand that, you know, they've got a high degree of empathy. You need to be slightly nosy. You do need to be a little bit confident, because, you know, when you're talking, your clients get, you know, they go through a lot of trauma. You need a little bit of confidence. But beyond that, it's those attributes, as I said earlier, about empathy, caring about people. You know, we love to talk about, our staff do a lot of philanthropy. So it's like, it's a more rounded person. It is not just about the bucks. If your driver is, how do I earn the most amount of money, then probably your drivers are not really suitable for financial planning, because by all means, I respect you need to earn a good salary, and salaries are good in financial services. If there's less advisors and we need more of them, the salary levels go up. But I do think also it suits that type of person. We follow the CII PFS training, which is called RO16, to reach your diploma in financial services. The CISI do one. I think there's now a new body coming through. So there's several bodies that will give you the diploma in financial services, the basic one. The rest of it is all on the job training. I mean, our advisors tend to do their exams in 1 year. So they do one every 2 months. So it's a bit, also when they're still coming out of school, used to exams. So we tend to get those done, and we pay for those, and most of ours go straight through them. Sometimes there's a fail, you know, there's always that intensity and nervousness about it all. But try to get them through within a year or 18 months. And there it's basically, then it's on the job. The thing nobody teaches you is how to do a good fact find with the client, how to build questioning techniques. Those are soft skills, and we teach those in-house. So the advisor is then working with a more senior advisor, doing more of the stuff, you know, moving the decks, the chairs around on the decks. But, you know, ultimately, over time, we then allow them to start talking to clients and giving an investment debrief. And that's where we nurture the talent coming through for this breed of advisors. So we nurture them really carefully. From a company perspective, I mean, you're looking at probably up to £3,000 in fees, £3,000 to £4,000 in fees to get an advisor from base to chartered with all the exam fees. So we have training programs and budgets for that. If you employ an advisor and put them through a training program, I would have a training recourse back if they decide to leave, because lots of advisors come to you, buy the training, and then disappear off for somewhere else for a bigger salary. But the idea is that so be careful if you're employing to make sure you protect your costs on that. It is expensive.
Thank you. Just a personal interest of mine, I guess. I mean, how far are you seeing clients who are looking for good investments, that are sustainable, investment in sustainable projects, who are looking for things which are going to help the world rather than destroy it? Is that becoming a feature of discussions?
Yeah, I mean, I have a big word of caution here on the scams, right? Because that is one of the things that scammers are appealing to people for their investment. So, for me, your pensions and ISAs should, in the main, now there'll be a bunch of people out there in hedge funds and things who will probably castigate me and troll me forever, but I like liquidity, making sure you're in something that you know what it is. That whole, I think it was the fund manager who said, don't invest in anything that you don't understand, that can't be sort of described on the back of a postage stamp. Investments don't have to be complicated, but be careful, in appealing to people, because obviously certain things have tax breaks, like solar, forestry, and that kind of thing. And obviously those are specialist areas. So we rely on the fund management industry. We generally invest in investment trusts and fund and ETFs, so we don't tend to buy direct equities. There are lots of things out there, lots of discretionary managers that do have those kind of green propositions that invest in direct equities, but you need quite large pension funds. So sustainability, ecological, ethical, dark green, light green, I think you just have to be very, very cautious. But we are somewhat reliant on the filtering that goes on at the fund management industry. So I'm told that when fund managers go to meet companies, these are the questions they're asking about their environmental, social governance. But I've always made the paper that PepsiCo, I think, has a very high ESG rating, but it makes drinks that makes people fat and has huge plastic waste. So there's always that whole complexity of an organization, a large organization. So I think it's about asking the right questions. Also, if you go to an advisor, you should be asking, we ask these questions. Do you have strong beliefs in not investing in tobacco or, environmental concerns? And it's a smaller market, but there are funds that are very good at screening that stuff out. And those are conversations we should all be having.
Sure. I think for final question, I guess, is how early in life should you be talking to financial advisors? I was thinking my children who are their 20s and they're sort of starting careers and so on, and they come and chat to me obviously sometimes about stuff.
I told you.
But for some reason they think I know something I don't really, but there you go. But I guess the subscription model you talked about earlier was quite interesting. But really, if you're starting out a career, you're not yet well paid and so on, is it still worth talking to a financial advisor at an early stage?
Well, I think as I said, part of our relationship, so when we onboard clients and they've got children, as those teenagers become teenagers, we often do sessions with them, and we don't necessarily just talk about the role of a financial advisor. We talk about peer pressure, we talk about mental health and money, we talk about budgeting. That's the big one. I love this. I've got teenagers and they're at uni, and they have those cards where they've got like a picture of a holiday and they put that into the holiday box. So Monzo, I think, does it, and Revolut does it. And that's encouraging them to put money aside for the future. So I think being careful with money and avoiding peer pressure is really, really important. I think kids can go, as I said, we provide as part of the legacy service. So we're looking after children's children. So, we will always bring them in early because financial services is very good at forgetting about the sort of the spouse and the children when giving advice. And I think that subscription model will help, but maybe talk to your financial advisor and ask him or her to give advice to your children if they want to keep you. So, these are services that a lot of the big investment houses do already for the very rich, and we need to be doing it for more. But I would be suggesting, I mean, you only have to look at a chart that says if you start at 25 as opposed to 35 and you put small amounts of money away for a long enough period of time, then you will be richer by the simple virtue. Even if we get extreme volatility, you know, and we're a bit pessimistic about the future, long term generally, you know, putting money away will put you in good stead. But it's more education in schools is my answer to that one.
Well, it always reminds me of the Hitchhiker's Guide to the Galaxy and the restaurant at the end of the universe, which costs an astronomical amount to have a meal there. But of course, if you put a £1 in a savings account 2 million years before before the meal, generally you had enough by the time it came. So.
Listen, the concept of a pound in a jar, I talk about that to 14 to 16-year-olds. Just put a pound in a jar. Now, these days, no one has cash anymore. We're a cashless society. But you know, there are still £1 and £2 coins floating around. Just start it. So, and it's always that thing about pause. You know, just wait. And it's even in today's world of consumerism, when we want to consume less, going back to your sort of ethical, it's like I kind of pause now and I say, do I really need this? Do I really want this? Is there a better way that I could do this? And I think these are, if we teach our children in school more about that pause, reflect before spending, you know, then maybe you'll be able to get to that restaurant in the book, which I've not read.
Well, thank you very much for that. That's been a fantastic session. Lots of food for thought, and you know, very many thanks to you for turning up and just talking through your state of the universe, I guess, view of financial advice at the moment. And I think it is an important issue that going forward we need sufficient people, sufficiently knowledgeable, qualified, and with the interest of the consumer at heart, to make sure the profession has a future. But thank you very much for that. I've got a few other thank yous to do at the end of the session. First of all, again, to our sponsors who enable us to run these series of webinars. And just to say that we have coming up a continued packed program of things that for you to take part in. Tomorrow, digital innovation in financial services with low code, no code, digital care on Thursday, and next Monday, achieving borderless payments. So an awful lot going on still. And do keep an eye on our website to see what's coming up. So just to thank you, the audience, for being here, for your engagement, and some very good questions today. To thank you, Petronella, once again, for your inspiring presentation, and we look forward to seeing you again on another occasion. Thank you very much.
Thank you.